What? Secret Secret Wars? What? Patrick, what is that about? All right. So, I decided to look at that Secret Wars. Let's click on that new tab. What I decided to do is revisit a past training framework there that really got me going. That was a gateway to classical charting, technical analysis, and it's Stan Weinstein's Secrets for Profiting in Bull and Bear Markets. So that is, why am I doing this? Well, because I think I have unfinished business with Stan's framework. And I've been reading up on the book again the past few weeks. I think I read it 2-3 times. But with the experience I have now, it's like I have a lot of these, that's what he meant moments, you know? When you replay a society game, a board game, when you're older, and then you reread the instructions and say, that's not how we played when we were kids. So the rules now have meaning or more meaning, and I just want to revisit it. Classical charting pattern, the way I do it now, it's awesome. Minimum overhead. Check the candles once per month. Lock and load. Forget Stan. You'll see. I'll go through examples. More work. But you ride the waves longer. You ride the stages. Stage 1, consolidation base. Stage 2, the bull run. Stage 3, the consolidation phase. And stage 4, the drop. Only to repeat over and over and over. Sometimes a stage 3, the top, sometimes could become a stage 2. Well, we'll see that. So I'm going to it's on my bucket list there. I want to close a chapter correctly on Stan. So I'm doing a Secret Wars special project. I'm going to be dedicating 5% of my NAV as risk to the Secret Wars. And 5 simultaneous open trades, 1% risk per trade. So that's my risk and money management for the Secret Wars initiative. And I'll be adding in YouTube, my YouTube channel on Bad Charts, there'll be a playlist called Secret Wars. So if ever you're a Stan Weinstein disciple, just want to listen to that, you'll be able to just go in the playlist on Bad Charts called Secret Wars, and you'll see all my episodes about Secret Wars, Stan Weinstein's, the way I am doing it. And don't hesitate to tell me, hey Pat, look, we're doing it this way, there's this way. I don't mind information. Maybe that's 2006 when I started this, or 7. I didn't have Google, maybe it was less friendly. But now the information is exponential, and I've seen there's a few websites or guys or Stan Weinstein disciples, and I'll be reaching out to them to see if they could come and give their opinion, and I'll try to see how they're doing it on their side also. And yeah, the podcast will be called Secret Wars, episode number 001, and so you could follow that linearly. And what else do we do? Okay, so right now, for those not too familiar with Stan Weinstein's trading framework, I'm going to use 5 years weekly candle chart. What's important is a weekly candle chart, 30-week simple moving average, and RSI 9, and volume indicator, super important. He has like something called the triple confirmation for where you need the moving average has to be flat or going up. You need volume, heavy abnormal volume on the breakout candle. And you need to be going above a resistance, a horizontal resistance line. And we'll look for those entry signals on the chart today. And after that, over the weeks, what I'm going to do is do some exploratory episodes to refine the process and get the rust out of my system, since I haven't been doing it a long time. And after that, I'll do another series of episodes and go through charts, looking at them through Stan Weinstein's eyes, and see if I could get some entries, fill up my five trades. And then from there on, once we have the 5 trades, then I'll just be doing follow-ups every week and moving my sell stops according to Stan Weinstein's strategies to exit. So that's where there's the more overhead, and probably one of the reasons I moved away maybe from Stan Weinstein's way is every week, every 2 weeks, there you have to take a look. Okay, do I move my sell stop? And I'll show you the why. See, it says using trailing stops, but it's not an automatic trailing stops like in the system where you program it. It's you have to have a pullback, and then after that, the price has to go back towards like a V, back towards your price action. And after you move your sell stop under there, there's a trader's way, the investor's way, where you put your sell stops a little further away under the moving average instead of directly under the pullback. And he also uses trend lines. If you have an aggressive trend, I'm trying to draw lines on the. If you have an aggressive trend line, then after that, if it's violated, you want to get out. And you also use swing rules, which is a little bit about classical charting. If you have, let's say, head and shoulders and the measure move added to the breakout line, he calls that a swing rule. So you could use that also as to target and move your sell stop up to that eventually. And you also could get more aggressive on your sell stops moving up. If the moving average starts to flatten out, then even if you're an investor and you usually put your sell stop under the moving average, you would actually put it under the exact V, the pullback and the price going back up. So that's going to make more sense when we go through a chart, and you'll see that. And let's do it, man. Enough of this theory. Let me open my and today I chose Apple. All right, let's get right down to it. Here's my Apple. I have my 10 years monthly candles. What? No. I created a Stan Weinstein profile with my interactive broker software. Kind of cool. 5 years, weekly candles, 30-week SMA, volume, and RSI. I think the triple confirmation is the RSI. I might have said something else previously. We'll do it now. And Apple is pretty nice setup. What I'm gonna do here is we could do. Okay, you see this 3 moving. Okay, here's the stage 1. Right here. Or even here. Okay, let's move it. Let's go back in time. And wow, okay. Let's start from here. So what we're looking for is, okay, let's say where we're going to start. Okay, where's the latest one? Okay, it starts here. Okay, let's go back here. Okay, so we're right here. We had a nice stage 2. That. Then we had the stage 3 at top, and after that, stage 4 going down, moving average starting to flat out, and now we have some price action around the moving average, and that's our stage 1 right here. Breakout candles right here. What do we need? Breakout candle above resistance, horizontal resistance, and always never buy if the price action is under the 30-week moving average. 30-week moving average is going up. We have, look at this candle of volume, like 2 times or 3 times average volume. And we have the RSI going up 50, above the 50 line, or if it's crossing the 50, even better, going positive territory, going upwards. So we have the triple 1, 2, and 3 here, the breakout above the resistance line. Stan puts his sell stops super far. So right here. So enter here. Sell stop is below the pattern. And I think that's one of the things I adapted back in the days, that I said, look, even if it goes back in, it's game over. I'm out of the pattern. But that's how he does it. Maybe this is too far away. Maybe the pattern for him is shorter term, and this would have been my sell stop right here. I'm not quite sure, guys. The Stan Weinstein guys, with all the examples that you've seen, you've been practicing for the years, let me know where you put your initial sell stop. So I'm just going to do it as the book says, right back down here. So this is my risk all the way here. This is, I'm going to do my sizing for this to equal 1% of my NAV. All right, let's move. Let's move the candles. Price action goes up. Whoa. Even here, see, I would have still been safe, but so right now we have the V, right? Okay, move that here. Right here. You could see, I like looking at the RSI. When I see it's easier on the line to identify a V. Price action goes down and up. Back to my original price. So here I would put my sell stop right here, right under that candle, the trader's way. And the investor's way of putting the sell stop would have been under that V, but under the moving average. And in this case, they're the same, so don't worry about it. It's the same. Price action goes up. I'm looking at my, here we go. Is that a V? Yeah, so here I could have put a sell stop here. The trader's way would have been under this candle here. Under the investor's way, he wants to give it more wiggle room for the price action to reach its target. And the moving average and the investor's way of exiting a trade eventually will become the trader's way when the moving average starts flattening out. That's the hard work, man, of Stan. You have to keep looking at your charts a lot. I always go back to my rule of emotional landmines. The more you look at the chart, the more you interact with it, the higher the chances are you get fearful, you get greedy. Right now it looks cool, but back in the days, maybe there's bad news, good news. And if then you say, oh no, I just want to get out, and then you miss out on the 5-year bull run. It's hard. Need a lot of experience. You have to have confidence in your emotional IQ. And it's tough. Nothing's easy, man. Everybody says there's a system. Even a perfect system, your emotional IQ gets you in trouble. And price action right here. Another bottom. I would have slightly moved up my sell stop as a trader, and I would have moved it a lot as an investor. See, they're starting to get close. Moving up. Oh, here another one. Price action starts going back up. You could have waited a candle or two to make sure like the price action goes higher to those highs. I think that's what he meant in his book. This could have been a little too early. And that's probably the errors, right? The errors of applying a training framework. This is not 1 + 1 equals 2, and this is 1 + 1 equals 11. There's a lot of options for adding 1 and on. Right now we're still good. Price action keeps going up. Whatever, move my sell stop here. Price action went up and down. You could have moved your sell stop here. You don't have to be super fast to move it up. You could let a few candles go in. You're already way in the positive. And investors' way of selling and putting the sell stop right under the moving average under that V. What do we have next? Oh, okay, we're out. Bam, bam. You're out. A few things come to mind here. Okay, if you're the trader's way, this is what you've locked and loaded. Let's do that arrow. The money arrow. Wow. Okay, so that's the money you made. You started at 115, got out 166. That's what you made. And you were out of the risk. You were out of the risk 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Well, about 10 weeks later, Your risk, remember this is 1%. 10 weeks later, your risk became like maybe 0.3%. And after that, you would have been at 0.3% of risk until of your NAV until you move your sell stop here after that first pullback. And after that first pullback, then you were already in the profits. All right, you're here. You didn't quite reach the top yet, but pretty close, right? So that's how it works. There's another thing we didn't look at is if you have an aggressive trend line. So what's aggressive? What percentage angle is that? I don't know. I could look at the drawing in his book. Did he want us to take it early? But a trend line is 3 points touching it. 1, 2. See, we didn't quite have that. If I can show that 1 point, 2 points. You could have always said, okay, this is a third one. But you could have, maybe if you could have got triggered out here. But you see it coincides pretty much with this one here. So no, you're good. That's a perfect play, perfect stand. Honestly, if I'd start what's happening here? Okay, a few candles. And you see the moving average maybe starting to slant. Is this maybe a top, maybe is this a stage 3 starting? Who knows? Or maybe a stage, it's definitely a stage 3. Is it going to continue to stage 2? Possible. And could we have a stage 4? Who knows? Those are the next moves. Stan always says, don't worry about getting triggered out, going up on the way. Let's say the pullbacks here would have been higher and you get pulled out. There's nothing wrong getting back a little higher on after the turbulence has proven twiggled out. And then the price action continues in the upwards move. Nothing wrong with that. He says that's like a cost of it's like insurance. It's you just pay, you get out just in case, and just that move that you weren't in, that you didn't profit from. Well, that's just the cost of doing insurance. So that nothing wrong with that. Unless you get in after just continue on later on. That wasn't too painful. So that's pretty much Stan Weinstein. I hope next time we get I'll play a bearish scenario, so I'll play stage 4. So now we got the stage 1, breakout, triple confirmation, RSI going up above 50, abnormal volume on that candle, on the breakout candle, and we're above the moving average going up. And then we practice how to exit, how to move our sell stops up, and after that, stage 3 starting. So we'll get back to I'll find another. Well, there's stage 4s and 3s in the aapl all over the place, because right now there was a stage 3 here, and after that a stage 4 going down, and there's some all over the place. But we'll deal with that next time. And these are part of the episodes, the exploratory sessions, where I'm going to get the rust out of my system. And we're going to go through, we could even go through aapl again. See, look, nice stage 4. Break down below the stage 4. Didn't last very long. All right, that's about it. And hopefully you enjoyed that. Go on batcharts.com/secret-wars, or just go in the top menu and go check out what I wrote there. Please contact me, anybody who's been doing Stan for the past years, and I'm very interested in knowing how you interpret the book and how your experiences have mashed out in real life, and what you have adapted that works best. All right. Thank you very much, guys. See ya soon. Ciao.